So guys, today I had a major deja vu because last week, this time, I was talking about the exact same setup. I was talking about the exact approach of how I traded the expiry day because, and you guys can go back and watch that video. Last week, I talked about 16,000. So I remember that in the first 5 minutes itself, the market broke down 16,000 and then the rest of the day was bearish, very similar to what we saw today. So what I did was I sold 16,000 call option and the rest of the day I sold more call options, and today was pretty much the same. So as you can see here that I sold a 16,000 call option at 45 rupees. Very similar setup, right? I mean, it's just a amazing thing to see how 2 Thursdays apart, the setup can be exactly the same. And the reason why the market was behaving the way it was because the US market had collapsed the previous night. So the bearish sentiments were not just in India, but around the world, the bearish sentiments were there. And this is how the recording of the day was. So trading these kind of days, bearish days, it's not very hard because again, as I mentioned in the last video as well, that you have a fair amount of sense that okay, yeah, it's going to be a bearish day. Occasionally here and there will be some up move, but call options normally don't cause too much trouble on these kind of days. So it's easy to just keep selling call options, keep hedging yourself, and unless something really weird happens in the second half or something counter trend rally starts, you more or less end up in some kind of a profit, right? That's basically what has happened today as well. So even though it may look like a brutal day for traders, actually it was not, right? If I compare it with other expiry days where the market makes several moves, up move, down move, then again up and down, those are the hard ones, right? Those are the hard ones where you have to be very agile. You need to know when to get in, when to get out, how to manage your stop loss, how to hedge yourself. There are plenty of things to worry about. On days like this, it's relatively fine. I mean, as long as you don't get greedy, you don't make some really stupid mistakes, and you more or less will end up in some profit, as far as my experience goes. Now, the bigger picture is that we have broken 16,000 for the second time, and the way the US market has fallen, it is very likely that we are going to see some more downside. So I will be watching out for 15,750 level. And if 15,750 falls, it breaks on the downside, then we can even have further downside. So that will be something to watch out for. But apart from that, it was just an easy day. I believe there was 1 or 2 stop losses that got hit, but most of the time it was just simple breeze. Take the trade, keep your stop loss, and just manage your risk and let the time decay, let the expiry effect do its job, right? In fact, I like expiry days that are boring. I don't want expiry days to be interesting because the moment it starts getting interesting, that is where you start to see some losses, right? So boring is good. So I hope that you guys also were able to make some money. So with that, I'm just going to wrap up this video.